The Bank of Uganda has maintained the key benchmark lending rate at 9%. The central bank says the policy decision is necessary to support economic growth, which is likely to be affected by the recent outbreak of coronavirus in China and an invasion of desert locusts in the East Africa region. CGTN's Baleke has more.
Uganda's central bank says although economic growth prospects remain positive, the outbreak of the coronavirus may affect the growth outlook.
There is considerable uncertainty regarding the duration and severity of the coronavirus outbreak. If it persists for an extended period, the effect on global economic activity is likely to be larger than currently projected.
The central bank says the immediate effect of the coronavirus on Uganda will be through imports. 25% of the country's imports come from China, and many of these imports are raw materials and capital goods.
If you don't import capital and raw materials, how do you then end up producing? So either it automatically means that little supply of goods that will come through will be expensive, and therefore the cost of production will be high. Alternatively, if you're importing consumer goods, they require be high, the price will be high.
Preliminary estimates from the Uganda Bureau of Statistics indicate that this financial year, Uganda's economy will grow in a range of 5.5 to 6%. Public infrastructure investments such as electricity, coupled with improved agricultural performance, will also contribute to economic progress. On the domestic scene, Bank of Uganda says constraints to agricultural production, including uncertain weather patterns and the current invasion of the desert locusts, could also weigh in on economic activity. The locusts have plagued several countries since the start of the year, including Somalia, Ethiopia, Yemen, and Kenya, and have crossed the border into Uganda. The UN has warned of possible high levels of acute food insecurity, with millions of people requiring food assistance.
That has now a knock-on effect on people's ability to pay back loans. That has an effect on people's ability to invest or to engage in other productive activities.
But despite the global and domestic risks, the Bank of Uganda says the next 2 to 3 years, Uganda's economy is expected to grow at an average of 6.3%, supported by lower lending rates from the central bank. Baleke, CGTN, Kampala, Uganda.